Phones, laptops, digital cameras, and even hospital pacemakers all contain one crucial ingredient: lithium. Practically everything that requires electricity to function and can be remotely transported requires lithium-ion batteries to power their systems, and this includes electric vehicles, specifically Tesla. So why is lithium such a good investment right now? The US electric vehicle market is estimated to grow from $28 billion in 2021 to $137 billion in 2028 at a compounded annual growth rate of 25% between 2021 to 2028, which is insane when compared to the average return of only 8.91% from the S&P 500 and Dow Jones Index in the last 20 years. Even though the auto industry faced a massive downfall during global lockdowns, the post-COVID era has seriously accelerated the adoption of EVs. Supply chain issues regarding activities such as China's closure of major ports in Shanghai and Shenzhen, along with severe labor shortages across the world, has led to a spike in consumer prices, especially oil. This graph illustrates the price of crude oil as of April 2020. In which the prices ballooned over 612% at the peak in June, coming in at a staggering $120.67 per barrel from just $16.94 in April. Although the price has considerably dropped slightly from its peak at $89.43 per barrel, it still remains highly elevated. The issue was exacerbated by the US decisions to begin imposing harsh sanctions on Russia following their invasion of Ukraine, and oil imports from Russia were completely cut off, resulting in a net decrease of nearly 700,000 barrels of crude oil and fossil fuels per day. In addition, King Salman of Saudi Arabia also recently rejected Biden's plea for stepping up their oil exports, and the current oil crisis remains a largely unresolved dilemma. So, it's no surprise that with the current oil shortage, US gas prices have surged to peak levels, with gas prices currently harboring a 51% increase since the start of the COVID-19 pandemic, equivalent to the total growth of 14 years of gas prices prior to the pandemic. It has become increasingly unaffordable to drive gasoline-fueled cars with these prices, which is precisely what makes electric vehicles so appealing to Americans right now. From the average electric bill data of US households, it takes roughly $13.96 to fully charge a Tesla, which runs 267 to 365 miles per charge. Compare this to the current price tag of $51 to fill the 13.2-gallon tank of a Toyota Corolla, which runs 435 miles per fill with regular grade gasoline. This represents a 72.6% decrease to the net price per fill. Prices of gasoline and electricity vary between states, with Oregon residents potentially saving over $1,200 a year on gasoline alone. Additionally, EVs also benefit from lower maintenance costs from their usage of electric motors as opposed to combustion engines in traditional gasoline-fueled cars. Electric motors seldom need maintenance on components such as engine oil, spark plugs, and fuel filter replacements, as they have less moving parts in their engines. And as such, Americans are expected to save over $4,500 on maintenance over the vehicle's lifetime, and this is not including the savings on monthly gasoline refills. As EVs become increasingly affordable for the average person, one of the most critical industries that is set to benefit from the boom is the lithium industry. Batteries in EVs are largely lithium-ion batteries, as lithium ions can be recharged via a reverse reaction, able to store a lot of power for long mileage, and charges at nearly 100% efficiency when compared to the standard lead-acid batteries, which have lower charging times. Lithium as a raw element is also very difficult to obtain, as only 8 countries produce lithium, and 3 of them, Chile, Australia, and China, account for 85% of overall output. Lack of availability, coupled with President Biden pushing for more green energy storage, is encouraging the American special minerals industry to increase domestic production of the batteries. Political pressure, scarcity of the mineral, and increasing demand from electric vehicles have led to lithium prices quadrupling over the last year. So, knowing the enormous potential of the lithium industry, how do you invest in lithium? The simplest and more efficient method to gain exposure to the lithium market is through lithium stocks. Investing in these companies who mine lithium allow investors to scale their investments along with their growth. The top US lithium stocks in our view are Albemarle and Livencore. Albemarle is a specialty chemical company and is the largest lithium supplier to the EV market with a market cap of $33.75 billion. In the last 12 months, Albemarle has reported a top-line growth of 30% to $4.33 billion, with a 50% growth in operating income largely due to the increase in prices of lithium coupled with a massive surge in electric vehicle demand. They have reinvested a huge portion of their retained earnings back into the company for the capacity of future growth as seen in the rapidly surging EV market, and this has caused analysts to put forward strong ratings for the company. And at a time when the broader equity markets have remained choppy in 2022, ALB stock has delivered an impressive 22% year-to-date return and trades near its all-time high. Livencore is the second biggest specialty chemical company in the US for lithium compounds. It is the largest supplier to Tesla for lithium hydroxide and extended their contract with them in 2021 for higher volumes. They also cracked a deal with BMW's electric vehicle division last year, as they have reported close to $590 million in gross revenue, which is the highest in the company's history, and a 2.5 increase in operating income. Their capital expenditure has grown in line with the increase in industry demand, while management seems confident in future volumes of lithium-based compounds. The stock has outperformed the broader markets by giving a stellar 30% return in 2022 so far. But for safer options, the LAT or Global Lithium and Battery Tech ETF, trading on the NYSE ARCA exchange, is an index designed to measure equity market performance of global companies involved in the lithium industry. It invests 80% of its assets in companies via American Depository Receipts or Global Depository Receipts. A systematic investment plan in a fund like this ensures there is no regional concentration given the universal exposure and tracks the lithium industry across its entire supply chain from mining to end battery producers. It gives investors exposure to chemical manufacturers and innovators in China, which are otherwise difficult for the average person to invest in. Although the returns wouldn't be as exponential in companies like ALB, the last 3 years has well proven the bullishness of the lithium and EV industry. LIT can prove to be a steady compounder in a great way to capture all facets of this booming industry. But in the end, lithium companies are a proxy play to the EV market and can turn out to be a rewarding long-term investment. But with current valuations and the amount of growth already priced into it, it can be very risky for a new investor to delve into. There's no doubt that lithium companies have a lot of scope for innovation and players will surely consolidate and gain market share. Hence, investing in global ETFs and companies with market dominance in this space is the way forward. Want to capitalize on the elevated oil industry? Check out our suggestions on one of the most promising high dividend oil stocks out there.